Get ready for the biggest headlines of the day. The U.S. Coast Guard Cyber Command is preparing for massive operations support, planning a new requirement valued at over $100 million for integrated operations management services. We dive into what this means for national security and the future of cyber defense.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we look at the massive shift in the sales tax compliance world. Zamp has raised $30 million to scale its AI-driven sales tax compliance across over 12,000 jurisdictions, completely changing how businesses handle tax obligations. Find out how this operating system is tackling a multi-billion-dollar market. We turn to the financial world with SuperCom reporting record full-year 2025 results, hitting record revenues and EBITDA, driven by securing over 35 new U.S. monitoring contracts and a significant $17 million award in Sweden. We break down the numbers behind this impressive growth. And finally, we look at the college football landscape. We examine the concept of returning production and how it might be reshaping win totals for teams like Missouri in the SEC. Don't miss this deep dive into the stats that could change everything. Stay with us for the full story. The U.S. Coast Guard Cyber Command, or CGCYBER, is preparing a significant new requirement for integrated operations management services, valued at over $100 million. The Coast Guard plans to issue a firm fixed-price contract to support cyberspace operations across its networks and systems. The selected vendor will be responsible for providing comprehensive technical, operational, administrative, and security management support, including analytical expertise, to safeguard Coast Guard infrastructure and information systems. The scope of work will specifically focus on protecting data and systems within the non-classified Internet Protocol Router Network and the secret Internet Protocol Router Network segments of the Department of Defense Information Network. The anticipated contract award is scheduled for the fourth quarter of fiscal year 2026, with the solicitation release expected on May 28. The contract, which will be issued under the GSA's schedule vehicle, is projected to run through July 24, 2031, with work performed in Washington, D.C. This requirement reflects the Coast Guard's ongoing expansion of its cyber capabilities and workforce to combat evolving threats. In 2024, the service established its first cyber-focused reserve units to enhance threat assessment, incident response, and joint operations with U.S. Cyber Command, aligning with CGCYBER's mission to defend networks, protect the marine transportation system, and counter nation-state actors. Zamp has successfully raised $30 million in funding to accelerate its mission of eliminating sales tax compliance burdens for businesses across thousands of jurisdictions. The company positions itself as the operating system for sales tax, leveraging artificial intelligence and specialized tax and legal professionals to manage the entire compliance lifecycle, from filing and registration to data normalization and taxability mapping. The impetus for Zamp stemmed from a recognition that the complexity of sales tax, exacerbated by the Supreme Court's Wayfair decision, created an unsustainable burden for businesses. Traditional solutions often left clients struggling with data management and uncertainty. Zamp addresses this by building its own proprietary tax data layer across over 12,000 U.S. jurisdictions, moving beyond reliance on third-party data. Key differentiators for Zamp include its end-to-end workflow ownership, where the platform handles every step, and the integration of AI agents with tax experts. Crucially, Zamp backs every filing with a direct penalty guarantee, shifting the service model from charging for inputs to charging for guaranteed outcomes. The platform is already being utilized by more than 120 accounting firms, which are leveraging Zamp either as a referral partner or white label service to scale their compliance offerings. Zamp reports achieving over 100,000 on-time filings with a 99.97% accuracy rate, remitting over $300 million in sales tax for its clients. Rohit Badenge, CEO and founder of Zamp, detailed the funding round, which was led by Acro Capital with participation from Thomson Reuters Ventures and various accounting firm partners, alongside backing from Valor Equity Partners and others. Badenge highlighted the market opportunity, estimating the global sales tax compliance market to exceed $30 billion, driven by e-commerce, SaaS, and retail sectors. He emphasized the strategic importance of the accounting firm channel, noting that with 3/4 of U.S. accountants expected to retire within 15 years, firms require scalable solutions to maintain their practices. Regarding future strategy, Zamp is focused on scaling the operating system by expanding AI agent coverage to new service layers, increasing geographic and vertical compliance depth, and significantly boosting output efficiency, aiming to increase a single compliance team member's output from 12x to 100x. In offering advice to capital-constrained companies, Badenge stressed the importance of capital efficiency, building leverage through product and automation rather than relying on headcount. He emphasized that strong customer retention and a commitment to backing the work are vital for long-term resilience in this sector. SuperCom, Nasdaq, SPCB, has announced record full-year 2025 financial results, signaling significant operational success and market confidence. The company reported revenues of $27.9 million, an EBITDA of $9.4 million, and a GAAP net income of $3.75 million. Key performance indicators showed substantial improvement, with the gross margin expanding to 55.2% and a non-GAAP net income reaching $11.23 million, translating to a non-GAAP EPS of $2.47. Furthermore, the company demonstrated strong balance sheet health, with cash and equivalents increasing to $12.2 million and shareholders' equity reaching $43.5 million. This positive momentum is underpinned by aggressive business expansion. SuperCom secured over 35 new U.S. electronic monitoring contracts and expanded its footprint to 16 states within the U.S. market. Internationally, the company secured a significant $17 million national electronic monitoring contract in Sweden, reinforcing its global presence. CEO Orden Trablesy highlighted that these results reflect the successful execution of the 2021 strategic transformation. He noted the strong performance across revenue, EBITDA, and net income, attributing it to disciplined execution and growing global demand for their public safety and electronic monitoring solutions. Trablesy also pointed to the company's strengthened balance sheet, citing a 45% reduction in outstanding debt and over $16 million in growth capital raised. Market reaction to the announcement has been overwhelmingly positive. Following the release, SPCB stock gained 9.02%, adding approximately $3 million to the company's valuation, with the stock currently trading at $9.55. Momentum scanners indicate strong upward movement for SPCB, contrasting with slight declines seen in some peers. While recent contract wins have generally correlated with positive price movements, investors are also factoring in prior instances where good news did not sustain gains, alongside the impact of one-time charges. SuperCom remains focused on scaling its business, expanding its global footprint, and delivering cutting-edge public safety solutions into 2026 and beyond. An analysis of the concept of returning production in college football, particularly in the context of modern roster transfers, is being explored by a football analyst. The statistic is utilized within a rating system, including Bill Cease SB Plus rating, to gauge the retained or lost production from players returning to a team. Typically, high returning production correlates with increased team quality and more wins. The analyst examines historical data from the previous season, comparing returning production numbers with actual win totals and year-over-year changes. Early data showed mixed results, noting that top teams with high returning production sometimes regressed, while other teams with lower production experienced significant gains. The discussion shifts to the Southeastern Conference, SEC, focusing on teams ranked lower in returning production. This subset of teams showed an average loss of 1.5 games compared to the previous year, with specific examples cited regarding South Carolina's sharp decline and Missouri's regression. However, the analysis highlights a significant trend. The average returning production across the college football landscape has dropped substantially since the COVID-era bonus years, falling from 76.7% in 2021 to 53.7% in 2026. This decline challenges the traditional assumption that high returning production is a reliable predictor of success, especially when returning percentages fall below 70%. The analyst points out that transfer statistics are complicated by the replacement of players, suggesting that the loss of production from a departing player might be offset by a new arrival, potentially normalizing production loss in the future. For the upcoming season, Missouri is noted as having low returning production, which raises concerns about their potential for a limited win total without a championship bid. The final projection based on current metrics suggests Missouri could be in the 6-7 win range, ranking 76th nationally in returning production and 12th in the SEC. The report concludes by noting that while the numbers present challenges, the ultimate outcome remains uncertain, suggesting that other factors may influence win totals.